Let me ask you a question. You see that bank right there? We all use them to save our money, right? But have you ever stopped to think, what is a bank actually doing? Is it just a giant super secure piggy bank? What if I told you that the money you deposited last week might already be helping someone else buy a car or start a business? Banks are like the heart of the economy, pumping money to where it's needed. And if you want to be a smart investor, you need to understand how this works. Let's dive in. Welcome to the Investment Nerds, your personal guide to investing in the African stock market. Part 1. The simple genius of a bank. At its core, a bank is a middleman. It connects people who have money with people who need money. Here's the simple breakdown. You and I, savers. We deposit our extra cash because it's safer than under our mattress, and we earn a little interest. Think of interest as a rental fee the bank pays you for using your money. Borrowers, people and businesses who need loans to buy a car, build a factory, or start a business. The bank's magic trick. The bank takes the money we deposit and lends it out to borrowers at a higher interest rate than what they pay us. The difference between what they charge borrowers and what they pay us savers. That's the bank's profit. This process is called maturity transformation, taking short-term deposits and turning them into long-term loans. Part 2. How banks make money, the 3 main ways. So let's get into the specifics. How does a bank actually make its billions? 1. The interest rate spread. This is their bread and butter. They pay you 2% interest on your savings, but charge a borrower 10% interest on a car loan. That 8% difference is pure profit for the bank. 2. Fees, and more fees. You know those charges for ATM withdrawals, monthly account maintenance, or wire transfers. That's all fee income. It adds up to a massive amount. 3. Investing. Banks don't just lend to people, they also invest in things like treasury bills, remember our last video, and other safe financial products to grow their money. Part 3. Why this matters for you as an investor. Okay, cool story, but why should you care? Because you can own a piece of this money-making machine. When a bank is listed on the stock exchange, like the ones the Bank of Ghana is pushing to go public, you can buy shares of that bank. That means when the bank makes all that profit from interest and fees, a portion of that profit can be paid to you as a dividend, a cash reward for being an owner. If the bank grows and becomes more profitable, the value of your shares could also go up. So a bank isn't just a building, it's a sophisticated business that profits from managing the flow of money. Understanding this is crucial before you even think about investing in bank stocks. Now, I'm really curious. What's the one thing about how banks work that surprised you the most? Was it the interest rate spread or fractional reserve banking? Let me know in the comments below. If this opened your eyes, share it with a friend and give us a follow for more simple breakdowns.